Welcome everyone to our Single Touch Payroll webinar Phase 2. My name is Anita and I will be stepping you through today's session. Now I know that this is a lot of extra time and work that needs to be spent to get ready for the next phase. However, we have to get it done as it has been implemented by the ATO. I am here to make your transition just a little bit easier and guide you through best practices to follow to be compliant with the upcoming changes. Now, what I will say up front is that we are not financial advisors or accountants. So what we will be covering today is the basically practicality of things, how to code and how to map things out for yourself when it comes to the tax rates and anything financially based that to suit your business. Obviously, you will need to have a look at the ATO portal for further implementation of the codes or have a chat with your accountant or bookkeeper in that regard. So let's get stuck into it. We've got a lot to cover today. First on the list, we will talk about the compliance of STP Phase 2, how it benefits our employers and our employees, any key changes that are happening because of the STP2, what isn't changing, housekeeping rules. So this is in regards to cleaning up your file, which we will cover, and doing the mapping tools, which were emailed through for you, the 2 Excel spreadsheets, and in regards to STP deferrals. So for whatever reason, if you are not ready to transition to STP2 with the cutoff being the 30th of June, then you can seek the ATO deferral from their website. Now, talking about compliance, in the 2019-20 budget, the government announced that Single Touch Payroll would be expanded to include additional information. Now, all payroll products need to be STP compliant. This is the regulation coming directly from the ATO, and in our case, the payroll product is Wagemaster, which has been white labelled from the payroll product WageEasy. STP Phase 2, it will reduce the reporting burden for employers by streamlining information from your employees to multiple government agencies, so you wouldn't need to manually report to those third parties. Now, benefits for employers, so you will no longer need to send a tax file number declaration to the ATO. You won't need to provide lump sum electronic letters to the employees, and also you don't need to provide separation certificates. The STP Phase 2 also allows you to report any changes of your payroll program or through the payroll ID as well, and any payroll information will be reported in real time to Services Australia. Now, the benefits for employees. So for them, most of the data will be pre-filled and it will be ready for their individual income tax return when they do that at the end of the financial year, which is coming up. And employees can provide the correct information if they have, for whatever reason, reported incorrectly, any overtime, study and training support loans that they forgot to include, they are able to amend that. And streamlining claims, as we said, Services Australia will receive the payroll information in real time. So for those employees that you do have that are also on Centrelink benefits, for instance, their benefits from Centrelink will automatically calculate based on the STP report that you send through. So everything is linked. STP information will be used to assist with outstanding debts to the Commonwealth as well. So what isn't changing? Now, the way you process STP reporting, it's the same steps as you currently take. As you can see per that diagram, it's the same reporting screen in Wagemaster, and it will be the same, with STP2 as well. The due date of your reporting requirements, they have no changes either. Your tax and superannuation obligations, they don't have any changes. The types of payments that are needed are not changing, and the end of year finalisation requirements will still remain the same. Now, the key changes, however, there's quite a few of them. The disaggregation of gross. Now, previously the gross amount that was reported on behalf of clients and their businesses, it contained different types of amounts, and this all depended on the income type. With phase 2, the components of the gross earnings, they will now be itemised separately, with all of the payment types being reported consistently for each income type. Now, the reason why they have done this is to streamline the different income assessments that's required by government agencies, of course. Now, the termination, the reason for the termination is mandatory when an employee finishes their employment. Previously, an employer may be asked to provide an employee with the employment separation certificate. However, phase 2 requires the reason for termination to be included in the STP report that we send to the ATO. So then basically what we're doing with that, it takes away the need for the separation certificate. Okay, so it's easier for you as an employer. Now, income streams, payments made to an employee will now need to be classified following an ATO term called income stream collection when the STP reports are submitted to the ATO. This includes income type, payment type, and it may also include a country code. So this is only for specific income types. Example could be an Australian resident working overseas. Employment and tax. Previously, the tax file number declaration was required to be submitted to the ATO with all of the details of the tax information for new employees and any existing employees where their tax situation, of course, changes. With the phase 2, incorporates the employee tax information via the STP reporting. So what this is doing, it's basically eliminating the need to submit that tax file declaration to the ATO as a separate process, which is great. Once again, easier, streamlined. If you are registered an employer for WHM, so the Working Holiday Maker, you will need to make an additional change in the tax configuration setup, however, and I will show you where that is. With the lump sum electronic letters, at present, a payroll provider's client are required to provide the lump sum electronic letters to employees each financial year. The STP changes mean that this information is in the pay event prior to finalising of the income statement. And so then that means that it takes away the need for that lump sum electronic letter to be provided altogether. So it's basically, yes, it's a lot of work to begin with, but it minimises the effort that you have to put in the long run. Now, for child support, there are no amendments in the way that we code or report child support through Wagemaster at this stage. We will advise when the changes are implemented. When they do want to implement, obviously, the changes, it will be to report them directly via STP, whether it's deductions or garnishes. With the business management, if you're an outsourced payroll provider that has transitioned your clients from one payroll system to another, you can enter the previous BMS ID or pay ID in the new system, and then you can just proceed to use the new system's BMS ID or pay ID. The ATO will then link that information so that there is only the one income statement reported for each of your client's employees. This, of course, will replace the need for manual adjustments to ensure that your employee year-to-date earnings are not overstated. With the paid leave, there is no longer an incorporation as part of the gross earnings. So when you're reporting via STP, you no longer include them basically. Rather, paid leave will be reported using itemized leave type codes. So it'll be separated from that gross earnings and income. Any unpaid leave, this will need to be excluded from STP2 reporting altogether. Now with the allowance items, lucky last on our list, additional allowance type codes have also been added to meet the new reporting requirements. This will allow the ATO to assist the employee when completing their IATR, so their individual income tax return. We will go in more details when we open up our mapping tools in regards to the allowance items. Now, Wagemaster will present STP2 in 2 stages in the way of free webinars, just like today's session. Now, as said earlier, this new regulation must be followed to comply with government law. Stage 1 will be covered in today's session, and Wagemaster's STP2 functionality will be available early May. As the release date is so close to the end of financial year, which is the busiest time for everyone, of course, we didn't want you to stress and spend hours and sleepless nights, to meet this deadline. So this is why we have done this as early as possible. And this is why we also urge you to complete what we advise you today as soon as possible and practicable as well. So my suggestion is today, because we're spending the time already running through this and we're going through it, if you are sitting in front of a computer, please follow the steps that I am taking, and then at least you can get most of it done today. Now, stage 2, it's all about the execution. So what will happen is as soon as we enable Wagemaster, in order for us to execute what we do today, which is hopefully early May, mid-May, we will reach out as soon as that happens, and we will put in a webinar for STP2 Stage 2, and it'll all be about how do we execute now the housekeeping and how do we now report using the STP2. So stay tuned for that one. Hopefully that'll be presented in the 3rd week of May, and that'll give you plenty of time to execute that before the cutoff date. So the cutoff date is the 30th of June, 2023. We urge you to follow the housekeeping steps that we have created for you, so you have that seamless transition. What we will be covering is confirming the current information on file, and this is the first and foremost thing that you have to complete. We are going to go through and clean up any entries that are no longer used and outdated, so you will need to step yourself through any old entries that you have on record. Make sure that your company details, they are all correct, such as your trading or company name, your ABN or ACN. Now, if these are not up to date, you will need to go and correct them prior to doing anything else. So let me just show you in Wagemaster how to do this. So how we check our information is we go to File, Company Details, and we are looking at our company details here. So company name or trading name, make sure that the spelling and everything is correct. We're looking at the ACN or the ABN, making sure that it's correct. And obviously our client number and our BMS ID. Now, if you want to know what the BMS ID stands for, it's basically stands for Business Management Software Identification. It's like a digital footprint identity that's linked with the ATO. So this is it works in the background. Make sure that your ABN and your company name is linked to everywhere it needs to be linked to. Now, if there is a spelling mistake, if your name is not correct, if the ABN, for whatever reason, I don't know, dyslexic like me, maybe you have, entered a wrong digit somewhere along the line. The only thing that we need to be doing here is changing the company details. So we select change company details. We go next. Now on this screen, we're not entering a new license key. We are changing the license details on this particular one. So you select change license details, go next. This is just advising you what information is needed and make sure that it is very, very correct on file. So select that you have read and understood the above information and go next. This is where it allows you to actually do the adjustments. So if your trading name or your company name was incorrect, then you would amend that. If it's that and also your ABN, then obviously do the changes as necessary. For, in my case, let's say it wasn't meant to be a 8, it was meant to be a 7. So I'm just going to make that amendment. And then you need to confirm by selecting the checkbox. Confirm again. Yes, it's correct. Go next. The next screen is talking about how many employees this license is providing for you. So it will always say 5, but don't stress, because if you're an Wagemaster customer, then you will get 30 additional free of charge employees. So you will have a maximum of 35 employees there, but leave that as 5. So yes, the above licensing details are correct. Go next. Now this is where you would print the registration form or save it as a PDF. So if I hit next there, sometimes it takes some time. Yep. So this is where you can choose the printer, or you can go to Adobe PDF. Now I will recommend Adobe PDF, save the trees. So just download a PDF folder, email it straight through to us. Then what we will do is contact the Access group for a new license key for you, because each license key is connected to the details that are already on file. So if you make any amendments, including just one simple little letter, your license key will not connect with that, which means we need to give you another license key. So make sure you are emailing that through to us so we can get that for you as soon as possible. I'm going to cancel, however, because this is a test environment. Make sure you are closing the door after every transaction if you are making any amendments. All right, now the other thing I wanted to show you here in our configuration is if you now go into taxation and single touch payroll, it is very, very important if you do have a bookkeeper or an accountant lodging STP for you on your behalf, that you also fill this in. So make sure you are selecting that you do have somebody reporting as an intermediary and the details underneath. Obviously close door to change that information as well. All right, now I also mentioned earlier in the key changes that the tax configuration must be changed for working holiday maker. Now, so in the tax configuration settings, so back where we were, file, company details, taxation, but this time in the tax configuration, not in the single touch payroll. So in here, make sure, of course, that all of this is filled out appropriately. Make sure your branch number is included appropriately there as well. But this is where there will be, down below, a further checkbox. So it's going to say something along the lines of, are you a WHM registrant? And you would have to select that checkbox. So that's the additional tax configuration setup that you will need to do if you are a WHM registrant. Now, in extension to that, for STP2, if you have an active flat rate tax table, must change the name so then the ATO data can link correctly. So how you would check that, of course, or change it in this case, we would go up to Setup. You would go down to Tax and Tables. And let me have a look. Yep, I've got a flat rate there. So what this is in regards to is any flat rate that you have that's active, that you're actively paying via. So what we need to do is we need to edit it. So we can either double click and it'll open up, or we can highlight whichever line we want to edit and then press edit. So it's your preference how you do this. So here, pretty much all we need to do is we need to, if you have seasonal workers, in order for the ATO to link correctly, sorry, I'm writing and I'm not speaking. So seasonal workers, 25% flat rate. You will have to have seasonal workers in front of your flat rate. So it doesn't matter what you have in here, as long as you have the seasonal workers in front. So this is like a little key for their linking in the background that they use. So if it is a seasonal worker, as I said, make sure that you put that in front of your flat rate. Now, also for ATO defined, there is a link. So ATO defined, and then flat rate, obviously, whether it's 25% or 45%, it doesn't really, make a difference. It's up to you how you actually pay that to your employee. However, with the ATO defined, if you will need to ask your employee whether they are under a certain tax bracket, you wouldn't know which tax bracket. So please just make sure you are asking your employee in regards to that, because they will have an arrangement with the ATO to get taxed at a certain rate. So once you finish that, obviously press OK, and it will automatically change your flat rate to suit. Okay, so I'll close the door for that one. Let's go back to our PowerPoint and let's see what else we are going to cover. So the employees that you have on file, these will need to be checked and updated with the correct category type, which we will go over. The same if you have any employees that have been terminated this financial year that are still on file, these will need to be updated with the new regulations. So as I said, the termination reasons, these we will cover in May. So it's not ready for that side of things just yet. The use of allowances under the new phase need to be now categorized and mapped out with more details, which we will cover today. So the new tools, these are the ones that are going to help and assist you into getting this file up to date. All right, so now that we understand the overview of what needs to be done, I can take you through step by step through the first stage and what we are going to do. Now, as I've said many times already, the resources that you received, some of you may have successfully saved them to your device. Some of you may not have yet. What I want to teach you today is the best practice as to how to store all of these resources and where to put them onto your computer. So please follow along and do this now if you are able to. It'll save you time instead of doing it later. Okay, so let's create our folder first and foremost. So right click on your desktop, go down to New, Folder, and now we need to name the folder. So STP2 Mapping. So that's your folder, STP2 Mapping. Now what I would like you to do is open up your email. If you haven't already saved, of course, is the files. And what we're going to do is the two Excel spreadsheets that you've got, we're going to right click, we're going to go Save As. Desktop, or if you have chosen Documents or wherever you are saving that folder, you will need to go to that pathway. So mine's on my desktop, STP2 mapping, and then open. So it opens that folder up, and now we're saving it. Perfect. So do the same process for the other folder, Save As. See, now it recognizes already where I want to save it. So you can simply just go Save. Now that Excel mapping tool will also go into the folder. So then I can close that off. If I double click on my folder, I am able to see that both of the mapping tools are in there for me. So I'm just going to leave that to the side for now, as so. And what I want to open up next is Wagemaster. So please, if you are following along, open up Wagemaster again. And what we are checking for here is that the configuration and the file location is set to default. So how we do that is we go up to Setup, we go down to Preferences, we select Configurations, File Location, and this is what I'm talking about. So user-defined reports is ticked, user-defined queries is ticked. So make sure that these boxes are ticked for you. If they are, just close the door, okay? Now, why this is important, I'm going to show you, is if we go to HR, user-defined queries, this is all of the files and the reports that are available for you to export. So we will be looking at the information in here. Now, if I was, I'm just going to quickly show you, if I was to change the settings, so I'm just going to untick those. I will select, for instance, the file that I just created in there, and then also in here. Okay, so we can see the green ticks on the side, which means that this pathway is valid. It is recognizable by the software. However, if I close it into any other than the default, if we go back to our user-defined queries, you can see that there is no list of any reports there available. So that's why I'm saying please don't mess with the default there, because it's going to cause you some grief. So if you do have anything other than the default, please change it now. And the way you would do that is just select the boxes and it will automatically repopulate the correct pathway in there. And make sure you close the door so you save that data. All right, so now that we are here, what we're going to do is we are going to load some files up. So back up to our HR. We'll go down to user-defined queries. And the first that we are going to export is the Company Employee Award Department category pay rate. Now, this is all in alphabetical order, so that's really, really handy because you know where to look. So the Company Company Employee Award Department category pay rate. They give it such long names, but that one right here. So that's the one we need to open up. So just click to select it. Now, the reason why we are exporting this information is so you can be obviously ready to execute in the new transition, in the 3rd week of May. Now, the reason why we need this particular information is because of the employment category. So the employment category with STP Phase 2, there's only 3 categories that are valid and that the ATO will accept. We can only put in full-time, part-time, or casual. So if you have anything other than that, you will then need to go back into and change those employment categories for those certain employees, and then come back and have a look whether the employment categories are all up to standard or up to compliance with today's, STP2. So we don't actually need to map out any of this information. This is just double checking the information and the categories that it does suit the ATO defined categories now. So what we're going to do is we will export it anyway. It's good to have on file and saved into your STP2 folder. How we do that is we go up to the save icon up here. If you select it, hang on a second. If you select the little drop down, it'll have Excel. So you select Excel, and now it's asking you where do you want to save it. So we go to desktop. I select my folder STP2 mapping. I open that folder, and then I want to save it in there. So that's now saved. We're going to exit with a closed door, and we're going to open up our next file. So HR again, user-defined queries, and this time we're looking for employee tax tables. So employee starts here, we go down, and there is a little arrow, so just keep scrolling down up until you get to the tax tables, which are right there. So once again, select that. Now this has further query parameters that we do need to adjust. The financial year that we are doing this for is obviously 2023. The from date is always the beginning of the financial year, so we need to change the year here. And the month will be 1st of July, the beginning of financial year, and the end of the financial year being the 30th of June. There we go. So we've got our information. We select OK, and that is the report that it's going to give us for this financial year. Okay. Now, as I said in our previous, if there's any changes that you do need to make, so for instance, in a month's time, so you're exporting this now, but let's say in a month's time, you have actually changed the tax table for a particular employee, you will have to just remind yourself, put a reminder or do it as soon as you change the tax table, export the file again after you make those changes. So once again, to export the file, go up to Save, select Excel. Now it's already recognizing my folder, save in STP2 mapping. Employee tax table is my file name. Yes, save. Close the door. And there's one more we need to export. So back to HR, user-defined queries. And this one is right at the top, allowance, taxed, and super calculation status. So select that one, and mine's are very short, but this is all the allowances that you will have on file. So the records that you are exporting obviously is going to have a lot more information in there. Ours is just a test environment. It's example data. Please don't go off these taxed amounts and superannuation amounts, because this is just showing you how to code things. This isn't actually done according to anything, yeah, in that sense. So let's go Excel again and save. All right, now, as I said, this seems as if it's so much information today to be covering, and there's a lot more to come, but do the heavy lifting now. And then the execution, when it comes to the execution, it's going to be a breeze for you, especially so close to the end of financial year where time just eats away from you and there's just not enough minutes in the day. So please make sure that you do this as soon as possible, and then it'll just be easier from then on in. Now, what I'm going to do is minimize Wagemaster, and this is our file that we just created. If you didn't have it open, obviously you will just need to double click on the folder and it will open up. What we are going to be exporting to begin with is the tax treatment. So what I would like you to open up is the tax treatment mapping tool, as well as the employee tax tables. So double click on both of them to open them up. Okay, might always open up on the next screen, my apologies. Now, quick little tip if you want to split your screen, what you can do is drag one of or the mapping tool across up until you see that split screen and then let go. And then it'll give you the option to choose what other folder you want to open up on the next screen. So if you're using one screen, it's very, very handy when you are copying and pasting information. If you've got two screens, you don't really need to worry about that. So what we are doing here is basically the data that we've exported. We are going to copy it from here and paste it into here. Okay, so how we would copy and paste this is in two different ways. We can highlight by clicking with our index finger and then dragging for the information. We can go all the way down because obviously you're going to have a lot more information than I do in the test file. So that's how you would drag to get all of the information. So once you do that, you can transition it into the mapping tool. So I've selected which is grayed out. One option is to right click on the gray area and select copy. Or another option is to do Control-C on your keyboard. So either option is fine, it's whatever you prefer. Then you will need to transfer it in here. So select the first available field, which is A2, just there. And then you can do Control-V for Victor. Or alternatively, you can do right click and paste under the paste option with a clipboard. So both do the same function. It's, as I said, whatever your preference is. Also, what I wanted to advise you is don't copy the top heading because the top heading is already obviously there for you. So you don't double up and so you don't cause the Excel spreadsheet to crash because of too much information. So we can minimize that and maximize our mapping tool. And now what we will do, first and foremost, is down here, you can see that there is two separate tabs. First, I would like you to rename this to your company name. That's why we've called it your company name. So you can do that now. I'm going to rename mine. So Wagemaster Pty Ltd. And then we'll jump straight into the template. So I want you to select the template, and as you can see, there's so much information here. So this is more maybe what your file will look like. So more employees on file. So this is just an example. Please don't have a look at like the tax tables or the secondary taxes or the codes that we are actually using, because this is just a way of us showing you what it would look like on a bigger scale. It's not determined by anything else. You will need to, as I said earlier in the session, to go to your accountant for advice or the ATO directly as well. Now, what I do want to go through is the 3 columns here, so HIJ, that we need to actually map out. So it's only 3 columns. They're not that difficult. So let's run through each of the option and what it actually means. So the first option there that we have is the tax treatment. when you select the field under tax treatment heading, you get a little drop down. So if you click on that, you will see that you've only got the 4 options. So the first option you have is salary and wages. Predominantly, this is the one that you will be using. Then underneath that, you have the CHP. So with the CHP, that one is for closely held employees, and most likely that you've got family on the books or something along those lines. The next option you have is the WHM, so the working holiday maker, and that is if you do have any employees that are on a work visa, that you will put them and under that tax treatment. And then the seasonal worker program, that will be predominantly used for your shearers. So that's it. All you're pretty much doing is having a look at your employee and seeing how the tax treatment should be. Yeah. So whether under salary and wages, under closely held employees, working holiday maker, or seasonal worker. Now, based on what you code in the tax treatment is whether or not you need to code the next column, which is the tax item. So if you have selected SOAR or CHP, then you must code the tax item because the ATO needs more information. With the work holiday maker and the seasonal worker, it's not even going to give you the option to code the tax item. So you can't make a mistake. But those two, so let me just change them around so you can have a look. So working holiday maker, if I go here, there's no options. Seasonal worker, if I go here, there's no options. So I'm just going to delete that so I can show you that there really isn't. Now, with the salary and wages, we have to code one of these options under the tax item. And this is exactly the same as the closely held employees. We'll give you the option. Okay, so let's now have a look at the tax item options that we have. So we've got first the regular. Regular is just regular tax treatment and item, which means you will be mainly using that one. Then you've got the senior. Now with the senior, this is for 60 plus. And obviously these people don't know how to stop working. So you would use this option for your seniors. And for tax purposes, obviously it's very imperative, guys, that you are selecting the correct option and doing right by your employees as well, because what you code in here, it means they get taxed at a certain rate and get treated under a different category for Centrelink purposes and things like that. So to you, it might not seem that it's important or that important, but it actually does in the background. All these codes have a lot of different meanings. So make sure that you are double checking which codes to use. Now, the next one is the foreign resident, self-explanatory. If you do have an employee that is working under a specific visa in Australia, no TFN is self-explanatory, so they don't have a tax file number. And the ATO defined, obviously that one, there's certain circumstances that can apply. One example could be where a payee is a death beneficiary, for instance. Now, as these circumstances do change and vary, you will need to double check with your accountant, ask your employee, even double check with the ATO if need be, but make sure that you are double checking that they do belong in that tax item. Okay, so that's your second column. Pretty easy, guys, huh? Now, the third column, this is even the easiest because you wouldn't be coding the third column if you haven't coded senior in the second column. Okay, so this is like an add-on information that the ATO wants to know. So they want to know whether they are single, married, or illness separated. Now, the most likely reason for this is because obviously the data is now shared with Services Australia, and payments that they receive from Centrelink will be dependent on whether they are single, married, or illness separated, and other benefits such as rental assistance. And there's plenty of benefits out there for seniors. So we do need to make sure that we ask the employee whether they are single, married, or illness separated if we don't know for sure. So that's it, guys. That's your first mapping tool done. It wasn't that difficult. Now, the one thing that I will say is make sure that your data is saving. So you're not sitting there coding everything and then all of a sudden it's off and you've lost the data. So make sure that it is saving. If it's off, turn it on. Another way would be to go to File, and then you can go save a copy and save it in a different folder if you like. But as I said earlier, it's best practice just to keep everything together for STP2, so then you can quickly go and find the information that you need and the resources. All right, so what I might do is jump into the first tab and let's do the coding for my 3 lonely employees here. So first up, I've got John Graham. Now, John Graham is not on secondary tax, but this is information that it all comes from Wagemaster that we obviously copied and pasted across. So what I simply need to do is go in my first field, and John, I definitely know that is on salary and wages. So that is how I am going to code the tax treatment for John. For tax item, now John is a senior. Actually, now I know because I've got 3 employees, I know everything about them. So I can easily code this based on what I know in regards to my employees. If you're not sure, if you've got a ton of employees and you can't even remember the age of them, or you can't remember whether they've got anything, what you can do obviously is go refer back to Wagemaster. Now, to check any information about an employee, obviously hit the employee icon, and then under personal, which always reverts to the first page, this is where I can see the birthday and how old John is. So I can see that John is 67 years of age, and so here's my senior. So I can close out of there and go back and code it appropriately. Now, because I said senior here, I have to code my senior tab. Now, I do know that John is married because me and his wife go out for coffee sometimes, so I will select married there. Okay, moving right along to Ryan Hardy. Now, Ryan Hardy is my shearer. So because he's my shearer, tax treatment is seasonal. Now, remember how I said the tax item, we do not code for seasonal worker program. So if we go back to the template, as I said to you earlier, seasonal worker and the working holiday maker, we leave blank. So back to our Wagemaster. So under the tax, we leave blank, and is not a senior. So then we don't need to do anything for our third column under senior either. Now, my third employee, Janet. So Janet is a salary and wages as well. The tax treatment there is regular, and we don't need that because it's not a senior. So as you can see, like, it's pretty straightforward. Yes, it might be very, very time consuming when you've got, I don't know, 200 employees, and then you have to go through each individual one. And then if you can't remember, obviously you're back and forward from Wagemaster. If you're not sure of any tax tables or anything along those lines, obviously don't just map it out just yet. Make sure you're checking with your accountant. Make sure that all of this information is correct before you're mapping it all out. Okay, but well done. You have done your first mapping tool. So it is saved, which means I can exit out of there. And we will go straight back into our folder. And next we will open up the allowance mapping tool. Okay, so we're selecting our allowance mapping tool and our allowance tax and super calculation. Perfect. So as I said earlier, if you want to split the screen on the one screen, hold it to the side and then select which other one that you want. All right, so this is our exported data for the allowance from Wagemaster. And then this side is your mapping tool. But see how it's already on the template, so it's already pre-filled. So just select the first tab, which is Wagemaster Pty Ltd. So rename it with your company name, of course. And then I've copied and pasted it already, but just to show you how to do it again. So you would highlight the section with your index finger, holding and dragging, Control C, and then Control V. So that's your easiest way, remembering not to do the heading, as I said earlier. So once you've done that, minimize that and maximize your mapping tool. So as you can see, your mapping tool has a guide on the side that we've written out for you to help you understand the 4 red headings that are on top here. So what I would like you to do is to jump into the template first and foremost, and this is where I can explain things to you, and then we will go back to our first tab just to do our mapping. Okay. Now, the 4 headings, STP2 reporting group and subgroup, and then there's another allowance, an OTE, which is ordinary time earnings. So what we've done here is, because there is a lot of selections, as you can see here, there's a lot of selections that you have to maneuver in each category. We have broken them down here for you. The first option that we do have is the allowance. So as you can see here, right at the top, the first option is allowance under reporting group. So the allowances, if you've got allowances in the group option, then you have the selection of all of these codes in the subgroup option. So I'll show you that one too, as you can see here. Okay. So what we are doing here is going in and coding what the allowance is for. So the ATO wants to know more information, of course. Now, the easiest way to do this is to make sure that in Wagemaster, when you are describing or titling your allowances, you are putting in as to what that allowance is for. So with my case, I've got meal allowance, which now I know that this reporting group allowance belongs to the overtime meal subgroup. If you have just written allowance here, it's going to be very, very difficult for you to understand which subgroup that belongs to, unless you've only got just the one allowance, and then you're fine. But with mine, so obviously, if you've got allowances, if it's meal allowance, then your subgroup is meal allowance as well. But I'll run through each of these options and tell you what they are for. That way you have an idea as to when to use it, I suppose. But as I said earlier, these codes, check with your accountant, if need be, or directly with the ATO, whether to use a particular code or not. So this is just a description as to what these could be used for, but every circumstance, of course, is different. So the first one, which is the award transport, if you are obviously paying your employee under an award that also includes transport, you will advise in the subgroup section here. The task, this refers to an industry allowance, compensation for doing a job in a specific industry, for instance. It's like a bonus. So once again, to check that you are paying under a particular award, it would say whether you need to pay the task allowance as well. Cents per kilometre, it's deductible expense allowance if your employee travels for business purposes. So this allowance will be for the vehicle running costs. The laundry, so for cleaning of approved uniforms, if you're paying an allowance for that. Now, when you come to the other, so other, it's not really much information for the ATO. So this is the only time that you would jump into the third column. So the third column here is other allowance. So it's in the title. So if you choose other in the subgroup option, then you've got another set of options here. So these are quite straightforward. If, for instance, you know, for home office, I don't know, you're paying an allowance for internet costs, for instance, because they're working from home. It could be non-deductible allowance that you're paying them for something. Transport or fares, you know, if they live far away and, you know, that's your arrangement that you're paying them an allowance for a fare, for uniform, private vehicle, or once again, you do have the option of general. So if nothing else fits the allowance that you are actually paying, then you can put the general option as well. So that's your other. Then you've got your meals, as we said earlier. So that's obviously for meals if you're paying an allowance. The qualification and certification, it's just a bonus payable to employees that need to obtain or maintain a qualification. Tool, if tool allowance, once again, is part of the award that you are paying under, then that would be under that category. And then for travel, of course, straightforward. If an employee needs to travel for work, it could be payable for flights, accommodation, meals, etc. So that is your subgroup options when you select allowance in the first option. Okay, so from there, I'll do it here so you don't get confused. So from allowances, you've got the next on the list, which is bonus and commission, CDEP payments, director's fee, exclude from STP reporting, and gross. Now, all of these, as you can see here, we have listed that under subgroup, you don't need to do anything. So we've made it a lot simplified for you so you don't confuse yourself or so you don't think, oh, did I need to code something, and you keep clicking in every single field. So we've tried to make it as simplified as possible. Now the CDEP, obviously that stands for Community Development Employment Projects. So if for whatever reason your allowance is for that, then that is the one that you would put it under. Now, the other section that we have is the lump sum. So a lump sum as an option also will give you a subcategory because lump sum can mean a different type of lump sum for different reasons. So this is why the ATO wants to know what the reason is for. And unfortunately, see, this is easy to understand, the first subgroups that we just went through. This one is just in codes, so it's a little bit trickier to remember these, but I'll run through them with you. Don't stress, you will have the recording, you can play it back, or you can research this on the website. Either, give us a call, we can go through it again, that's not an issue. But recordings are your best bet, or the ATO website for these codes. All right, in saying that, the first lump sum A, type R. So the easiest way that you could possibly remember this is the R stands for redundancy or early retirement. So if you are paying a lump sum to do anything with this, then you would be choosing the lump sum A, type R. The next one is lump sum A, type T. So easiest to remember this one is the T stands for type, so any other type. So what this means is, to give you an example, is let's say you have paid a redundancy, okay, payout. But part of that redundancy payout, you have also, in the combined amount, have given them the leave portion of the redundancy payout. So the ATO basically wants this more defined and in different categories. So you can't actually put it through as a full amount lump sum just for redundancy under type R. You will have to separate which portion and which amount is for type T, which is the other type, which is, let's say, the leave portion, and how much was for type R, which is for the actual redundancy payout itself. So this is what the first two stand for, and they are predominantly the ones that you would be using on terminations and redundancies and things like that, and leave payouts. Now, lump sum B, it's not very common anymore, but this refers to an employee that has accrued long service leave but has accrued it from before 1978. So now, if you are paying them out on termination, you will need to put this under this code. So for those employees, the easiest way to remember the B is before. So before a certain date, I suppose, if that's how your brain works and if that's how you link little codes, that is sort of the easiest way for me to remember things. So lump sum B is before 1978. Now, lump sum D is used for tax-free amount in a genuine redundancy payment or an approved early retirement scheme payment. I couldn't link the D to anything for you there. My apologies, but that is the lump sum D. Lump sum E is used if you need to make a back payment to an employee that has accrued more than 12 months ago, and they have to have a minimum amount of $1,200 or more. So if the back payment is less than a year and less than the $1,200, then you can't include this under this code. So just to repeat that and rephrase that so you understand, it's the back payments that an employee has accrued for more than 12 months ago and more than $1,200. Okay. The lump sum W, which is the last one on the list. So this is used for return to work. So the W can be linked to work. An ex-employee, let's say, has been encouraged to return to work, and you have just paid them like a bonus, so like a lump sum, in order to, get them to come back. You would put it under the W. It could be that an employee has actually just given you their resignation papers, and you trying to encourage them to stay on, have given them a bonus in order for them to withdraw their resignation. So that would also be coded as a lump sum W. I hope that made sense, guys. As you heard, obviously there's a lot of changes in that. But yeah, as I said, if you can't remember anything, don't stress. You will have the video to look back on, and obviously you will have the ATO website and your bookkeepers and accountants as well. All right, next we're going to cover the leave types. So with leave, if you have selected under the reporting group, so let's say here, it's a little bit further down, then you also have a selection to make in the subgroup section. So with leave, as we said earlier, that's one of the key changes. It's not going to be reported through the gross amount anymore. It's got its own sections. Now, the first section there is other paid leave. This is the main option to use. So unless it fits any of these categories, then you will use the other paid leave. It's as simple as that. The paid parental leave, obviously, if you've paid your employee paid parental. Workers' compensation, if you have paid any type of approved compensation, even if the employee is terminated, but let's say you were paying as per insurance requirements, ongoing payments. So you will still have to link that under this subgroup. With the ancillary and defence, so this will include emergency services that the employee is called upon, or it could be even jury duty payments that you're paying. The cash out service, so this is when an employee wants the leave payments, but they don't actually want to go anywhere on holiday. I don't know why. I would love to go on holiday, but they basically keep working, but they do want their leave entitlements to be paid. So that'll be the cash out in service. And then the unused on termination. So if you have paid any unused leave on termination, these obviously will be in this category. The pay GW, that one's not available in the subgroup, so you would just code it as pay as you go, withholding in that section. But just coming back to leave, what I want to mention here, even though it's not in the leave section, but it's very, very, very important. If you are paying leave due to family and domestic violence, you must record this as part of ordinary hours or gross hours, or you could put it under a bonus for, let's say, I don't know, performance that the employee has done. But you must not code it under leave unless the employee specifically asks for this. Now, the reason for this is basically we cannot advise on a pay slip that it is for family and domestic violence leave. We don't know whether the alleged perpetrator has access to those documents and those pay slips, so we do not want to put our employees into further strife and further stress. So make sure that you do be aware of that one as well. All right, we'll go down to salary sacrifice. Oh, salary is not spelt right. Look at that, salary. Let's just remove that A. So salary sacrifice and superannuation. So that option there, if you select it, here we go, in the group section, then the subgroup option will be other employee benefit or superannuation. So there's no other option. Now with the salary sacrifice, other employee benefit, this is referring to anything other than super. That's as simple as that. So it could be, third parties that they want, to salary sacrifice, like to synergy or towards their rent, or it could be anything, mortgage and so forth. So anything other than superannuation, if they are putting their money towards salary sacrifice, then you would code it under the other employee benefit. And if it is a salary sacrifice for superannuation, obviously you would code it under the superannuation. Now, the reason why they have obviously done this, the ATO just wants to know which amount goes towards what, whereas previously a salary sacrifice would have been as one whole amount reported to the ATO, and they can't differentiate between how much is paid for what or towards what. Okay, so hope you're still with me. Hope you're still traveling along and not falling asleep. But we've got the last section here to cover. So we've got type. Now, type is the second column here. So this is what that's referring to. So in the type, if it's a deduction, so as you can see here, if it's a deduction, then your group would also be a deduction. Okay. Now, when you code deduction, your subgroup will be either fees or workplace giving. So there's only two options there for you to choose from. Fees would be if you pay, if your pay is being deducted, let's say for union fees or professional association fees. So you would put it under a deduction fee. And then if it's workplace giving, it could mean something like the social club at work. Yeah. So you are basically volunteering your employer to deduct some money from you for, as I said, social club or something along those lines. All right, well, we've covered all of that, so I hope that's now a little bit more clearer as to the first three columns that we have to map out. The only one that I didn't cover is the OTE. So OTE is just ordinary time earnings. All you are doing is just a yes or a no, so it's a very, very straightforward coding here. Is, let's say, the debt recovery deduction part of ordinary time or no? Yes or no? And that's it. And you just go down and list that in as well. So now that we understand, let's go back to our first tab, and I'm going to run through and have a look as to map out my allowances. So for child support, my first group here, what do we think it can be? Is it a deduction? Definitely is, because it's a deduction, and as we said earlier, if the type is a deduction, it has to be a deduction here as well. And then the only other option we have under the subgroup is it a fee or is it a giving? So is it voluntary or do you have to actually pay it? So yeah, you actually have to pay it. So it's fees. So that's my first line. I don't need to code the third line because remember, in the subgroup, if we had other, that's when we code the third column. So because we didn't have other here, we don't code that one. We go straight to the ordinary time earnings, and no, it is not ordinary time earnings. The next one on my list is meal allowance. So this is an addition. Don't worry about whether it's taxed or whether it's included in super. This is example data, guys. So you either pay it or you don't pay it. It's taxed or it's not taxed. Please, refer to your accountant or your ATO for this. This is just been coded just to show you. Now, meal allowance, as I said, what is the subgroup? Well, it's an allowance. And what is the subgroup here? It would fall under the meals. And then do we need to code this one? No, because we've given the ATO enough information here. Is it ordinary time earnings? No, because it's additional. The next one I've got on the list is the salary sacrifice mortgage, which is a deduction. So once again, we are coding as a deduction. What is the subgroup? The subgroup would be fees. We don't need to once again code the other allowance. And no, it is not. Next one is travel allowance. It's an addition. So with the travel allowance, it is also an allowance. The subgroup, there's travel. We don't need to code the third column. And then no, it is not. Unit pay, Shira is my next one. So this is an addition, but this one is gross. Now what would be the subgroup? Nothing. Because remember, here we've mapped it out for you. Gross, not applicable, in the subgroup option, which means you don't need to code any of this. Go straight to the ordinary time earnings, and yes, it is ordinary time earnings. And that's it, guys. And look, I know I've only got a few allowances in here, so it's quite straightforward. And I'm sure it can get very, very complex and complicated. And you just need to sit down in a quiet room somewhere and just sort of, go through it. Ask your accountant. As I said, we are here to help as much as possible. But as I said earlier, when it comes to financial things and codes, we can give you the best possible advice. But for proper financial advice, you do need to seek your accountant's assistant as well as the ATO directly. So make sure that it's all saved. Once it's saved, you can close out of there and close out of there as well. Perfect. So what we might do is go back to our PowerPoint, everyone. So just give me 1 second so we can bring that up. Okay. So what I want to cover as a reminder is the STP deadline and the deferral options. So you must update by the 30th of June 2023 for the STP2 reporting. This is the last day for wage easy customers, basically. We have done this webinar as early as possible so we can give you ample time to do the hard yards now. If you feel that you are not ready though by the cutoff date, which is the 30th of June, the only way you can get that extension is apply through the ATO online services. STP Phase 2 Stage 2 webinar, as I said earlier in the session, will be probably the 3rd week of May. We are waiting, obviously, for exact dates, and we will reach out and keep you posted in that sense. Okay, now if you don't have time or you need help, obviously, to map out anything, need assistance with that, we do have the one-on-one consults. These are obviously chargeable. We can do 1 hour, 2 hour, half a day, full day if need to be. Just reach out and we'll be able to assist you there. The customer success team is available free of charge, but this is just for basic questions. All right, so what have we learnt? Oh my God, so much. So after today's session, you should be able to confirm and house clean your payroll information. You should be aware of the benefits for yourself and for your employees. Understand the key changes in STP2 reporting, aware of what isn't changing as well. You are able to prepare for the STP2 transitioning with your mapping tools and understand and really understand the deadline, obviously, and the deferral options there as well. Now, thank you so much for listening. I hope you found this session very informative. I will just quickly place you on hold and I'll have a look if there is any questions. Please feel free to ask now and I will come back shortly and verbalize all of the questions for everyone. Thank you very much again.